Good morning, everybody. How you guys doing? And first, what's up, Tom Tom? I hope everybody had a lovely weekend after what was arguably a fairly irritating Friday. Hey, Jen Jen. Great weekend at the lake house. Ugh. Lakes are dirty. They're like bathtubs that don't drain. I'm usually working during the Sunday stream, but I have the COVID, so I'm here with you. Nice. So are islands. I mean, only because of human waste. The island I was on had a gazebo. It was very civilized and small. Lakes can be pretty to look at. You don't have to go in it. That's reasonable. You're buying Epstein's Island? No, I don't have that kind of money. What would you do with it? Burn it down? Start start fresh from the ground up? It's got too much history. It'd be better to get like a fresh island, one that hasn't been inhabited previously. Don't lakes have the amoebas that eat your brain? Yes, they do, Tom Tom. This is why salt water is better. Open a tourism business? People are weird. True. Sharks and barracudas. Well, I mean, if the water is not deep enough for a shark, then you're okay, right? Yes, and Giardia. Steve Irwin died in the ocean. You know, I know a lot of people are really big fans of Steve Irwin, but he deserved it. I think enough time has passed to say that he fucked around a lot and then found out. How many humans did you hunt on the small island? Specifically two, although I never caught them. But I will get a chance at catching one of them later. So, deserved is a strong word. Okay, had it coming? Yeah, I could agree with Code Black. I mean, you kind of deserve it if you fuck around with dangerous animals all the time for fun. Crikeys. I mean, the man stuck his head in the mouths of crocodiles. It's ironic that he was killed by a stingray, but I mean, good morning, Essa. There wasn't that much of a story to it, Jen Jen. So your chart shows more red side than green side. Well, this is last week's chart, but yes. It did. It did amused. Eventually. 3 hours later. He did more for animals than almost anyone. He definitely didn't deserve it. He could have done those things without baiting the most deadly of them. Lost 3K on Friday from over trading. I shouldn't have even traded at all and just kept my position open. Yeah, I almost blew up the WeBull account on Friday. This is a good time. I'm gonna now spend the next 2 weeks clawing it back. The real question is, was Steve long or short? I don't know. Ask his wife. Maybe the issue with Steve Irwin was that he went from crocodile to stingray, like someone moving from spy calls with theta to SPX zero DTE. You'd think that the crocodile would have been the zero DTE. Like you went from day trading to swing trading. Here's a good idea. Don't grab animals with giant spikes that hang off of them. I'd argue that there are quite a few people who have done more for animals, in fact, but he was definitely good for getting people interested in conservation. Yeah, that's fair. He was just kind of like a bogan, right? Like he didn't have the appropriate fear built into him as a child, and that, reduced his survivability potential. I have to leave for 20 minutes, but you don't have to pause the stream. Okay. Arguably, emergency exit has done more for the sheep population. Those are hybrids, though. They can't reproduce on their own. Thank God. All right, so I guess we could talk about what's gonna happen this week. Do you guys want to do that? We can sit here and talk about Steve Irwin for the next 3 hours too. I'm okay with that as well. No? Will you look at Funko? Ew. Uh, whoa. What the fuck did I just do? Okay. That went away. No, that's not Funko. Okay. I'm looking at it. Mm. These are some great profit margins. How do you fucking lose money selling pieces of plastic for $40? Like injection molded characters. What the fuck is this? Look at that bullshit. Big insider buying popped up on a scanner. Maybe they're idiots. They've got some really nice EBIT this year of like negative 100%. So killing it there. They're trading under book value. Although 700 million in debt and 1.1 billion in assets isn't a very good look. Cash flows are, well, criminally disgusting. They made $8 million last quarter. It looks like they have a debt problem. So they close more risk, but they open more risk to short VIX. So I'll kind of get into that later, but I think I understand how they're walking back their risk. I don't know how, again, it's hard to say how successful they'll be because they have failed in the past. But they're definitely walking back big chunks of their risk, and I'll kind of go into explaining how that works when like Dork and JFresh come on, if they come on. Blueberry Batman, welcome to Dillionaire, man. Welcome back to Dillionaire. Thank you so much, dude. All good. Sorry, yeah, I just looked at the financials. It looks like it's just gonna bleed. Yeah, I mean, sometimes insiders are just idiots. And they're like, ah, we're below book value, time to buy. Or they just feel like they can average down their shares. I mean, I'm sure Funko could get bought out by somebody who's willing to take on their relatively small amount of debt and maybe doesn't have to finance so many of the manufacturing costs themselves. I'm sure a lot of big companies own injection molders. GME is not going to buy Funko. I hope not, because GME has no manufacturing infrastructure whatsoever, and buying Funko doesn't benefit them in any way. Funko's gonna buy GME. All right, so I'll start with SPX. Um, so Friday we saw the pullback of some of the risk at 45.25 and a little bit of reduction in risk at 4400. Obviously, the things JPOW had to say really weren't bullish. They weren't particularly bearish, although all the central banks seem to be pretty much in agreement that they're going to have to go higher for longer on interest rates, despite the fact that that's not really going to get rid of inflation, and it's definitely not going to protect energy costs, right? Uh, However, it will drive up the dollar, and it will tighten credit spreads, and it will tighten credit conditions, and it will slow down the economy. And they are determined, despite the amount of money sloshing around in the system, to do exactly that. And that's really not, that really doesn't support the bull case. A significant chunk of the S&P 500 are refinancing debt over the next 2 quarters, 3 quarters. And they're going to be refinancing that debt at current rates, right? And that's going to be a big blow to credit facilities that are already, they're already trying not to use those credit facilities. Largely, we've seen a big decline over the last 2 quarters in the use of revolving credit facilities by mid-size and large cap corporations, right? And we've also seen a reduction in small business loan interest, right? And all of that is corporations kind of tightening their belts. Obviously, they're still going to try to push forward profitability, but probably at the cost of workers, right? And so, the central banks seem pretty determined to have their way, despite the route they're taking not being the most effective for reducing money supply. It's the route that's most likely or least likely to create widespread wealth destruction. So, I mean, yeah, bulls didn't really get what they wanted out of that, right? Bulls want interest rates to come down. They want economic stimulation to pick up. They want corporations to start financing growth. All of those things are going to get blocked by the Fed's current route, right? Like we know, and we know CPI and PPI are likely to come in hot again for September, which is probably going to, lock in the 0.25 increase by the Fed at the September FOMC meeting. So basically, nothing really bullish here, and as far as future growth goes, projections are going to have to be scaled back, even by the most bullish of bulls, right? Because most of these companies simply can't operate under those financial conditions. And even if some companies like big tech, who are very liquid, are able to outperform because they've leveraged their debt so successfully in the periods where debt was free, um, the rest of the index is going to drag against them, right? And so we end up in a situation where the Fed is very determined to push forward the conditions that we've been looking at for increased bearishness. And it seems there was no mention of bank resilience or soft landings in his speech. So they're going to push for a recession until they get it right. And with that news, we dropped quite a bit in the morning. We had noted the night before on SPX that a significant amount of positioning was, just out of the money here, going into the early morning, and just out of the money here, with the majority of straddle interest kind of within these strikes in the center, right? And so, we picked up the lower strangles, we picked up the upper strangles, we rejected into the end of the day and almost fell back below Vega risk. VIX still managed to stay above or below 16. But there was definitely a pullback of call interest, and but once again failed to break out above delta neutral. On the technical side, this leaves us with a very obvious, head and shoulders pattern, right? Whose breakdown would be roughly back here at around 43.35. I think for the most part, at least over the course of this week, they're not super concerned with the risk still present at 44.50 and 44.25. I think most of this got kind of cleared out in the middle of this week. They still have a significant amount of risk at 4400, and 43.75 and 43.50. Also 4300, but we're really far away from that still, so that's not really a consideration yet. I think we're going to continue to see them kind of walk down that Vega risk, especially as financial conditions get worse, right? And we get more and more negative data. They need to pull back that risk, and ideally they'd probably like to do it before anything significant happens. So I think we're going to continue to see these hard downside drops that kind of spike gamma, and probably bounces back to those 43.50, 75, and 4400 levels. And then on the bounce backs, we're going to see them reduce that Vega exposure, and then trend down. And as each level backs off, we will slowly trade lower and lower. Probably without any significantly large downside moves. I mean, over 100 BPS, at least until SLD and OPEX of September, right? Given the rate it's taken them to back out of the 4,500 through 4,400 risk. I would say it would probably take another few weeks for them to back out of the 4,400 to 4,300 risk. And 2 to 3 weeks puts us roughly in the same time horizon as the 4,500 to 4,400 risk. Now, the caveat here is that if negative data comes out, if Japan moves forward with some kind of, advance rate policy over 0%, if EU or Britain cut rates, which I don't think is going to happen, if there's any kind of major political news, then they could lose those levels. Much in the same way that they lost 45.50, 45.25, and a lot of 4,500 without ever being able to claw it back, right? So yeah, there's the potential they can lose these levels, but I think as long as things remain as expected, we will just continue to see them backing off of that Vega risk and reducing, the potential for the market maker to go long should any kind of unexpected event happen, right? And what that's going to do is that's going to continue to pull back that dispersion trade between tech and indexes, right? And so we're going to see vol start to continue to fall off on big tech like the Mag 7, and pick up slowly over time on indexes. And then we're also going to see, I forgot what the second half of that was. We're going to see more interest pick up in tail risk hedging, which will probably drive volatility higher as well. Anyway, that's what I got so far. So this week, my expectation is that we're probably going to dump. We're probably going to see about 43.50 again, maybe a little lower. That level will probably be met with a lot of resistance, and we'll probably bounce back up towards delta neutral. I expect delta neutral to kind of continue its slow crawl down, and a lot of our price action to kind of be like this. I'll get more into the reasoning behind that, and why I think that, but I think something like that over time. I know you hate it, but where do you see AMC going? All the way back to single digits? Why not? They can't pay their debt. They're not getting, the best thing that shorts can do to AMC right now is to crush their ability to liquidate shares at, $10+, right? And so, I mean, shorts are going to try, now that it's reverse split, shorts are going to try to drive the price into the ground as fast as possible. And that way, they can't capitalize on their share offering effectively, which would ultimately drive them out of business, right? How do you think Ryan Cohen will publicly humiliate himself next? I don't know. I just finished a 50-mile bike ride. Texas heat is the worst. Wind moon. Which way is the do you want the moon under us or above us? They both make you lighter. Any good shorts on companies that will not survive these rates because they already don't make money? Yeah. Yep. There will be. So basically, they'll keep VIX sub 18 forever. This is pretty wild. I'm not going to lie. I mean, that's their goal, but they may not be successful at it, right? I mean, they shorted the absolute fuck out of VIX on Friday, and it's still almost ended the week back above 16, right? They were very close to that 4,400 Vega risk coming right back in the money at the end of the day, and just barely closed above it. Regardless, they couldn't hold delta neutral, right? And that's really what matters. As you know, the Bulls really aren't in a position to gain a foothold, and I think there's a compelling reason for them to not try. If they're gonna try to de-risk those big short the short Vega positions, then having the market maker act as a buyer in these situations and provide the liquidity they need is advantageous. Can you talk more about hedging long-term SPX puts as spreads? Like for 30 DTE, do you sell 10 DTE 50 wide spread? Try to better understand how you hold your pickled SPX positions for so long. Yeah, generally. If I think there's a lot of potential or room has opened up for us to like shift ranges, right? Like say I'm holding like 4,300 puts, which I am. And some of the downside resistance drops off and downside interest picks up. I'll probably pull back anything I've sold down here, but in the meantime, I feel very comfortable selling something at like 4,350, right? And just letting that decay alongside my long puts because I can always pull this back if it starts to become a risk, right? You can sell something out of the money. If we were below 4,350, I would probably turn it into like a shorter dated debit spread to offset the theta decay, right? Maybe sell like a 4,250 against it or a 4,275. That way, if there's an unexpected overnight move and it drops into the money, I still get some profitability out of it, just not as much as I would have before, right? But yeah, if we're trading to the upside of that range, then I feel more comfortable opening credit spreads against it. Not always 10 DTE, sometimes like 5 over and over again. The yields tend to be better. I mean, if you want to deal with it's a pain in the ass, but if you want to deal with it, selling them every day or every other day can be a little bit more advantageous than selling a lot of theta all at once. If you get the opportunity to hedge on like a sharp turnaround like this, that can be a really, really good opportunity. You can always, say you're holding 4,375 puts, right? And they're not printing, because we're just trading slightly up from that range. And we fall below them. You can sell a credit spread here, capture some of the profits, and then if it bounces, if you think it's going to continue to bounce, then you can close that leg once the price goes back above it, and that allows you to capture some of the profitability of holding that put over time. Without having to give up exposure. So just wait for bullish pops, buy puts with theta, and farm the drops. Yeah. The upside remains really easy to play. The only reason the WeBull account didn't get blown up this week was because of that. Like for instance, on Friday, they dropped us really hard. They spiked the gamma up on the put side, and then they started selling the put side, right, and drove vol down. And I bought like a bunch of out of the money calls at like 4,390, 4,400, and 4,410, right? And because we know based on their positioning, they need it back above that level to de-risk, right? And so it makes it very easy to play the upside move. It's actually much harder to play the downside moves. They tend to be shorter. They're a little more violent, and the liquidity is not as good, so it's hard to get out of positions. But playing the bounce from from the downside move is pretty easy because we know all the levels where they have risk. So we know where they need to get the price back to in order to reduce that Vega risk and get VIX back down. I mean, normally, if you're trading at, 43.60, you're not going to buy 4400s and 4410s 0 DT and have any expectation of them printing. But in this environment, you can. How does the moon below you make you lighter? Pulls the water away. Hey Greg, hope you're having a good weekend. Question about car pricing. How lagging is a drop in the car market in relation to the stock market and economy? Hmm. I would say that the car market moves a lot faster than the housing market, because of the depreciating nature of the underlying assets. Um, it's also, it has a lot more discretionary buying. So you're likely to see people cut costs there very quickly. Somebody who, at 5% interest might have bought a $70,000 car will now only be interested in maybe buying a $40,000 car at, 8 or 9% interest. And so it tends to move a little bit faster. Defaults tend to move up more quickly, although not as fast as like the credit card market. So generally, like credit card defaults will move up before auto loan defaults, which will, and then like within auto loans, like new cars are less likely to default than used cars, and then then defaults will start trickle up to housing, but you won't see a lot of housing defaults until unemployment rises. Thoughts on Gme for the next 2 weeks? The earnings to do on the 6th. They are, or 9th, yeah, 6th. Also, do you think it's better to buy some Jan 25 deep in the money, like $10 calls, if you want to get more shares? I would never want to get more shares anywhere near these prices, but Jimmy's potential to move up is decent. We're getting a little pullback in liquidity over the last couple of days. Believe it or not, there was covering going on here during the drop, mostly because liquidity was made available, especially in XRT and IJH. This had to do with the like big misses in retail earnings and large sell-offs providing liquidity within the ETFs. And so we saw a little bit of covering go on there. Even though, the price went down, there's still covering occurring. Now we're starting to get into the range where more accelerated covering could occur. So I would say that there's a good chance we see something by earnings, but I would play it safe and probably extend my exposure beyond September OPEX. That way you can cover the FTD period, you can cover the earnings period, and you can cover the OPEX period. If you buy too short dated here, you could end up, in a situation where we get a little bit of realization, but not enough, right, to really be profitable. Like, maybe they cover a little and then start shorting again, and that sucks. And we had something like that happen here. We got a little bit of covering and we moved up. Oh fuck, I don't know. It wasn't a lot. I think it was less than 10%. It was about 12%, right? And then, they just used those covered shares to start shorting more, right? So you didn't really get like a full run. And this was towards the end of the ETF FTD period in July. So yeah, I mean, it's better to have some theta, But yeah, I do think at some point we're gonna see, a contraction, and that should lead to some price improvement. It usually does. Although there is significantly less call interest than there used to be, so it may not be a ton of price improvement. Super important market question. Who's going to win the Great British Bake Off Junior Edition this year? I don't know. Probably the most insufferable one. Do you think there will be a good Chewy entries this week if the market dumps? Seems cheap before their earnings. I really don't want to play Chewy's earnings. I agree that the stock is moderately cheap. And spending on pets is something that's not likely to go down early into, tightening budgets. So potentially their earnings could be decent. I mean, their prior earnings have been pretty good, but I don't have any interest in playing it really. Can you comment on DTCC enhancements to the calculation of National Security Clearing Corporation's gap risk measure and the variance of risk charge take effect October 22nd if it hinders the pumpers? Yeah, any margin haircuts are going to hinder their ability to continue to do this, especially variance on risk, right? If they're gonna change like risk exposure calculations, then yeah, having a bunch of short naked puts hedged by over leveraged zero GTE calls is gonna be it's gonna be bad for their positioning. Yeah, but they survived one margin haircut already, right? By turning to foreign lenders, and they could just turn. Maybe they'll just turn harder to Japan if that's the case, right? Could you expand on what you said in the Discord about Nvidia sold call cycle? I know you've brought it up before, but I went back through prior episodes and I couldn't find it. That's because I didn't talk about it a lot. I mean, Nvidia is overvalued, right? Everybody who owns it, all the institutions know it's overvalued. And so, but it's still a hot stock, right? And so you kind of end up with what went on with Tesla for a very long period of time, in that long holders of the underlying are, short calls. And so anytime the price drops, they pull back their short calls. Anytime the price goes up sufficiently, they start selling them. And this kind of creates this sort of effect over time, right? It's vol shorting, but it's not extreme. And as they pull back, like earnings was coming up, right? So you start seeing them pull back sold calls. And post earnings now they've started to sell them again. And so you're getting, you're getting the price walked down by sold calls. And once you can figure out the levels that are important to short call sellers, which I'm not just going to give you, since I've already given you majority of the information here, you can figure out where to go long and where to go short against long holders of the stock, right? Or you can just use it to sell credit spreads, which are still quite valuable, despite the IV crush. Did DCCC commit intergalactic securities fraudulation? Supposedly. I started a BABA position. Okay, you want to talk about BABA? You can hop over to that. So I waited a really long time to enter Baba, most of last week. I wanted to enter Baba on a retest of the trend, and then I didn't end up entering it until like here because I forgot. So I, despite waiting for a better entry, I ended up not getting it. Um, but I did enter 90, I think 88 and 85. So a little closer to the money, but yeah, the rejection here is nice. It could test again, at which point I would enter more. If that were to bleed up. But ultimately, yeah, I think it's gonna break down through its long-term trend here. And my mid target is about 82, uh, with maybe a further target at like 78, 79. It's still in a wait and see range, and if it breaks above this trend, there's pretty good reason to go long. Um, Especially if call interest starts to come back in. Now over the last 4 weeks on Baba, long-term call interest that carries positive Vega has dropped. Right, it's steadily dropped, and it dropped last week too, but it picked up a little bit into the end of the week. Well, actually, it picked up a little bit the end of Tuesday, and that's one of the reasons I decided to wait because I wanted to see if call interest was going to build on top of that bounce back or if it was just going to stagnate and sell back off again, right? Like everyone just got overexcited for a bounce. Some of that call interest bled off into Friday, but there's still a little bit of it left. So you know maybe a third of participants are betting that it's going to go up here, right? And ultimately, I think they're wrong, but if they do get traction and we break back up above 92, more are going to come in. And if more call interest piles in, then this could run back up. So it's very, put entries here are very close to risk. I would probably define risk as this range between 91 and 90.11. At 91.50, a break to the upside, I would probably go long at 92. And cut the short position to re-enter later. I'm 25 minutes behind live. You said you almost blew up your small port Friday. That makes me feel better about actually blowing up my port Friday. Oh well, I can reload Tuesday and try again. I mean, I'm gonna try to build it back up without reloading it, but yeah, it's tough. I mean, PDT is unexpectedly difficult and frustrating. Um, a lot of the times on the small account, I'm mimicking positions that I have in my larger account, but managing those positions is so wildly different, right? Like Friday's a really good example. I had like one PDT trade left, right? And I had I think it was a $6 premium 20 wide debit spread. I think it was like 43.95.75, something like that. It was either this or like 90.70. I can't remember. But this went like deep in the money, right? When we tested the low. But I only had one PDT trade, right? And then I had like a remaining, I had some other positions as well, but I had a remaining cash balance, like options balance for the day of like $6 in premium, right? And my choices here, it's like, I can lock in the profitability for the equivalent cost, right? But then I'm down, then I'm only $800 profitable on $600 up. I ultimately chose to buy 4410 calls, which printed and covered the position, but I lost out on the 4350 puts because we never went that low. And so yeah, I mean, like normally in like a regular $25,000 account without PDT, you just close this shit, right? There's no thought process beyond, oh, the thing I bought was correct, it's profitable, close it, right? So PDT, yeah, it's kind of a bitch, and the Franken spreads are fun, but they're wildly inefficient as far as capturing profitability. Um, so I'm gonna shift gears on that a little bit and grind the account back up to like 9-10 before I can start opening like Franken spreads again. I'm regarded playing the Friday out of the money call for the bounce. Those levels you mentioned, you thought it would bounce back to de-risk their position, were all explained in the Friday Pickles Picks chart. Well, Friday was tricky, and I'll tell you why. Because in the morning session, we already tested the upside straddle range or strangle range, right? So one would assume, given that this was before the Fed meeting, that they would have pulled back some of the upside positioning because, they moved it up overnight. You would assume in an attempt to de-risk that level before the Jackson's Hole symposium presser. And then, we moved down into the lower end of the strangle range, right? And so, yeah, a bounce from here would be expected to clear out the straddles, but the additional upside move back to delta neutral, that was a little more unexpected because they'd left a bunch of the strangle positions open, right? And they did eventually de-risk those by the end of the day, and then we dropped, but it was, generally speaking, usually all of that happens very quickly, right? And then you kind of get a move directionally one way or the other depending on the outcome of like the Fed decision, right? And in this case, we got that, but it was over a much slower period of time. So now I think we can pick a direction. Now that all of that, neutral positioning is cleared out. Sorry, is everybody 25 minutes behind? For someone who missed the drop from 4600 to 4300, real how? All right. Realistically, how much downside range is left? It feels feels chasey to enter below DN after we dropped $300 already. A lot more. So things don't really get super bearish, or at least the potential for bounce, a sharp bounce, isn't really removed until we start to fall below delta neutral, right? Below gamma neutral, as you've seen multiple times in the past, in instances where we've dropped below gamma neutral, like back here, for instance, gamma neutral was roughly there, right? Recoveries from under gamma neutral, and delta neutral at that time was down here. Recoveries from under gamma neutral are very common, right? But recoveries from below delta neutral are pretty rare. And the longer we stay below delta neutral, the more that's going to encourage long-term put buying. So if we go back to like end of 2021, for instance, where you see our first like sustained period below delta neutral on the S&P. This isn't, let me go out to a longer time frame. Okay. So this is our first like really sustained period below delta neutral after November of 2021, right? We fall below delta neutral at that time, and then we kind of stay there, right? We bounce back, we reject, we fall back below, and over this period of time, more and more put positioning, like long term put positioning builds, right? Because as we're under delta neutral, more and more people need to take on that like that left tail risk hedge, and so you start to see, you know, VIX move up gradually over time as more and more people take on the tail hedge, and you also see, you know, overall positioning start to shift more bearish, and so the longer we spend down here below DN, the longer or the more like positioning is going to become bearish. And so this is why, like, back in, you know, back at our peak, I was like, things aren't really bearish until we're below delta neutral. Well, now we are. And so now we have the potential for a longer term continuation of downside, something that we didn't really have in this range, like just below gamma neutral, right? Because just below gamma neutral, it's very easy to like kind of turn things around. You can leverage the market maker and like run the price of the stock up, which is what we saw in basically every dip after March through now, right? So since March, which was the last time we were below delta neutral for any significant period of time, like longer than a day, you know, almost every dip below was met with an immediate upside bounce, right? And we saw it, you know, here. Hold on, let me shrink this so you guys can see a little better. And we were seeing a lot of this occur in like the post OPEX period, but yeah, basically everyone was turned around and then, you know, leveraged to the upside here, all of them, right? Every single one. But below delta neutral, that's a lot harder, right? You know, right now we have $130 range till we get back to a positive gamma environment. That's quite far away, you know, from our current price. And so far we've not even passed like the 30 and also short call positioning is building rapidly on the upside. Not only is a lot of the position building, but it's got a lot of theta too. JC, welcome to Dillionaire. Thank you so much, man. Okay, so Macy's, I'm a bit torn on it. I bought some. I bought like 5,000 shares, and I bought another 5,000 on Friday at the low. I like the dividend. If I just hold it through the dividend, sell some in the money covered calls and cash it out, I don't really care. I picked up some at the money puts. I picked up some at the money puts here. Then I closed those out and rolled them down to at the money puts at like 12. Or calls rather, at 12. I think it's got pretty good potential to bounce. It's tricky though, right? They're seeing issues with consumer credit, which is a huge part of their business model, and accounts for a significant portion of their revenues. But their earnings were decent. So despite the negative outlook, I think it can claw back. It's still very early. It's also kind of a meme stock, right? So I think like the post earnings, this is just way too aggressive, and so I think like a bounce back to maybe like 14 is possible. That's all I'm holding it for right now. I don't want to. It's not something I want to own like long term or anything like that. As a business, that they've definitely got some issues. There's problems with shrinkage. There's problems with consumer credit. There's debt issues. The Macy's management almost ran the company into the ground once already. So yeah, I think the drop's a little excessive in the short term, but over the long term, I'm not super bullish on them. Thoughts on J&J dropping into end of day Friday? Do you see momentum picking up to the downside? That would be cool, but I don't know. I mean, it could. J&J's already dropped all of the expected range that at least I had for it. I know end of day Friday it fell back under 165.30. So yeah, that could very well be, a continuation to the downside below 155. I do think J&J is a bit overvalued. I think now that they've broken off K-View, we're going to continue to see the arb trade on it unwind. So I think if you've got a little bit of theta, there's a very good chance. But obviously, that resistance at 165 is critical for continued downside. And if it's going to stabilize in its uptrend, which it broke through in after hours, right? It's kind of loose, but it's good enough. If it's going to stabilize in this uptrend, right, and keep moving up, I'd want to get the fuck out of any short positions. Right now I'm long and short at 165 and then short at 160. So, and I've got a little bit of theta, so I've got time to see how this goes. The prior two tests of the resistance obviously broke down but recovered. So we could see that happen yet again, right? Is QQQ below delta neutral? Let me take a look. That might not be. Just barely. Delta neutral on QQQ's 365. And Friday close was 364. I'm thinking about picking up to Jan 2025 10C. They're around $1. They're very cheap, yeah. I feel like the company has had some problems, but very cheap. What do you think? I assume you mean Macy's. Well, I already weighed in on that, but yeah, I do think a bounce back is possible. I think a lot of people forget that they also own Bloomingdale's, which is a little more insulated from like reductions in consumer discretionary spending, right? Because they're mostly like a luxury goods retailer. And they also kind of have the middle ground between Macy's covered with like the Bloomingdale's discount stores as well. How far dated are those JPM long puts? End of September. But remember, here's another big structural shift in the market. If we stay at these levels on SPX into the JPM roll, right? Like say short Vega wants to, avoid um does August 31st or September? Those are September 31st, right? So if short Vega wants to avoid the JPM long puts down at 4210, right? And we slowly just de-risk those Vega positions over the next couple weeks, right? Then they could maybe avoid falling through the 4210 level by end of September. And if they're able to do that, the JPM collar is going to roll down for the first time since last September. And that's a big structural shift in market dynamics, right? Because For the last 3 quarters, the JPM collar has been rolling up. And if you believe that the JPM collars kind of define our trading ranges on the broadly on the S&P, which I think they do, then it's a pretty big structural shift to have the JPM collar roll down, right? And that could be the beginning of a period of time where the JPM collar is continuously rolling down quarter over quarter. Going back to discussions on SPX falling below DN, what effect does that have compared to being below GN? It's more impactful than being below gamma neutral because the market maker is net negative delta and gamma, right? Whereas below gamma neutral, the market maker is still positive delta but negative gamma. Now they're negative both, and gamma's or delta's the first order derivative, right? And so it's significantly more impactful. How does KView look? I mean, fine. It just joined the S&P on Friday. It also had its dividend that morning, so I think we saw a lot of like buy and sell flux occur. I think it's still very much within its like lower range. I know it had a couple days of good performance, followed by a day of bad, and everyone's freaking out. But I think ultimately the short position here is gonna continue to pull back. I may have to get a little more theta on my calls, but calls on it are super fucking cheap, so it's not a big deal if I have to. Theta on it's not very expensive either, right? Because it's so short that call pricing is kind of skewed, and IV to the upside's relatively cheap. But I mean, this is the problem with the J&J and KVU play from the beginning, and why I don't want to handhold anybody is because these massive arbitrage positions when they collapse, it's very unpredictable how, right? Like how exactly they're going to they might get out of a little bit of the J&J long, and then get out of a little bit of the KV short, and back and forth and back and forth, and over time collapse the arbitrage trade. They might get out of one side, as we noticed, they got out of the Johnson and Johnson side very, very heavily since the split off date. But the KView side hasn't really performed very well, right? There hasn't been a lot of short covering on the KView side, right? And so we're a bit asymmetric. Very rarely, although occasionally it does happen, both sides of the arbitrage trade will collapse symmetrically. But they do require management. It's a very complex trade, right? You're trying to trade alongside major institutions that are fighting back against each other. China reducing tax on stock by 50% to bolster investments. They also blocked their banks and hedge funds from selling stocks. That's not good for them, especially not long term. But it may boost their it may boost stock prices in the short term. That's why I said if BABA breaks up above 92, I'm going to go long on it temporarily. But that's not something like that's not gonna have positive long-term impacts. Probably not even positive impacts after like a few weeks, right? Any big economic news this week? Yeah, we have a few things. We have PCE this week. This week's actually pretty loaded, especially Wednesday on. So Tuesday we have Jolts and Redbook. I think both of which are very important. Consumer sentiments up in the air right now, and Michigan's report on Friday was pretty negative. So even additional confirmation of negative consumer sentiment would be moderately bearish Actually, you know what? The Dallas Fed index on Monday, so tomorrow morning, that's going to be pretty important too, because prior in the prior cycle of manufacturing reports for July, Empire State was kind of holding things up. While all the other regions were contracting heavily, Empire State was expanding rapidly. Empire State is now also contracting, right? And so anybody bullish on a turnaround in manufacturing, or some increased expansion there, is going to be looking to each of the regional reports to see if, expansion is picking up somewhere else. I don't think the forecast for Dallas is very good. It's probably not going to hit. Manufacturing broadly is contracting everywhere and is probably the primary source of increased unemployment right now. So that might weigh a little bit on the Dow into tomorrow. And then yeah, so after that, Jolts is going to be really important. That's expected to pull back moderately, but a bigger pullback there I think is possible, especially with the revised job numbers from last month. Job quits and consumer confidence are going to be important on Tuesday. The Dallas Services Index will also be pretty important, especially services revenues. If those are continuing up, that's showing that we're really not getting that softening in core inflation that we thought we were. It's one of many data points to confirm that, but it is a data point. ADP employment change, wholesale inventories, GDP shit on Wednesday, which there is a bunch that matters, like GDP price index. Corporate profits are expected to contract, but well, remain contracted, but improve over the prior quarter. If those are even worse, that'll be pretty bad. GDP growth rates expected to expand despite corporate profits continuing to contract, which I'm not even going to get into. I guess that's what the analysts want to see, is expansion in GDP, but I'm not sure they're going to get it. Then we have core PCE prices, which are expected to contract, but they may not. So we'll be looking to that. That's pretty important. Then we have personal income spending and PCE on Thursday, which is going to be important. Also expected to moderately contract. Core PCE index month over month is expected to stay flat, but PCE may go up, right? So the PCE price index may increase. The core PCE may stay flat. But I think market participants are going to lean on core a little more because they don't want to acknowledge the bearishness of rising oil or energy prices. And then Friday we have non-farm, unemployment, and ISM manufacturing, and I believe services. No, just manufacturing PMI. So obviously, if unemployment is up, that's bearish, right? Bearish in the sense that the economy's contracting and we're laying off workers and the labor market's starting to soften. Maybe a little bullish on the fact that the Fed's less likely to keep raising rates if unemployment is going up. But the Fed isn't going to care unless unemployment is going up month over month, probably for an entire quarter. Remember that the Fed wants unemployment at like 4% by the end of this year, and we're still a ways off from that. With JPM shifting to roll their collar down, I mean, the pumpers are at much less risk. I really want them to get blown up. No, that would be, well, no, because it pulls the short call side of the collar down, right? So the pumpers have less range to pump into. And then, the puts would move down, but we could just move down to the puts again. I've been waiting for some China's pumping their market news to go short Baba. Well, I mean, they've got to try, but I mean, reducing their tax liability isn't gonna benefit their currency, and it's definitely not gonna benefit their current debt problems. So, yeah, I don't think that's a great idea on their part. Expansion without profits, interesting. Yeah, right. Going back to the discussion on SPX falling below DN. Okay, so you got that. All right, let me see if Dork and JFresh are around for a second. Oh, they literally are. Okay. Hey, what's up? What's up, guys?
Yo, how you
Yo,
doing?
doing all right. How are you?
Doing pretty good, just chilling out, bullshitting with Jay Fresh about some stuff, the data from Friday, all that kind of good stuff.
Yeah. The data from Friday is mixed.
Super mixed. Yeah, I was just looking at some of that. SPX looked like SPX looks pretty much the same as it did on Thursday.
It
A
also looks
little,
the same as it. Well, I would say it looks more like Wednesday.
yeah. But we were talking about it. Like the delta from calls fell off like a tiny bit, I guess. But Jay Fresh brought up a good point that we're getting really close to charm neutral,
Mm-hmm.
and in terms of an advantageous position for bears heading into OPEX, being below charm neutral would certainly be a notch, on the bears belt.
Yeah. Well, I think most of the call positioning over the last week was shorter dated. Um, if you look at the skew and charm, you can kind of see where it picks up in the early part of the week, and we begin to stabilize our downside momentum. But I think overall, charm exposure is slipping negative, right, as more and more long dated puts come in.
Yeah,
And so I think we're probably going to see the underside of that, but I still think, yeah, I'm not really sure if charm neutral is going to be super impactful to near term pricing, right? Like we've fallen below charm neutral before, and it's been stable in the past. So I think de-risking Vega exposure is still more important than getting below charm neutral.
I'm almost certain you're right. The only it's just that it switches over to like a gentle, constant downside pressure sort of effect.
Yeah.
Um,
Well, we
it's
already
it's
have a
just
couple of those, right? From Delta
yeah,
and Gamma.
like
But
I said, it's
yes,
just
yeah, there's a
another notch.
downside push from Theta below charm neutral, which
Yeah,
is
exactly.
interesting.
So it's just another notch on the Bears belt. I'm
Yeah.
not so I don't know. It's not necessarily like a support resistance or anything, but those effects kind of have they have effects, and the further we go below it, right, the more of an impact charm hedging is going to have heading into OPEC.
Yeah. Yeah, I agree.
So something to keep an eye on, I guess. But yeah, mostly just pretty pretty vague sort of stuff going on. I don't really necessarily, in terms of the options positioning at large, doesn't seem like we got much like forward guidance from big options players.
No.
Uh, I did see on my liquidity measurement on SPX, it did drop again,
Hmm.
um, which all that really means is that the price could go up or down a bunch, right? It doesn't necessarily mean bunch of downs, but it does mean that volatility, I think realized volatility is, I expect it to be high going into next week. So that's interesting.
Yeah.
Uh, what else? I don't know. We got a whole smorgasbord of data next week, and that's going to be interesting for
Yeah, I
sure. I
just
think
I
with
just I just ran through all of that with everyone. There's
oh,
there's a
dude,
lot
there's so
of
much.
there's a lot of pretty important stuff.
Yeah, I think the biggest ones are going to be PCE. Well, then and combined with GDP, like all that comes out at the exact same time. But all the things
Yeah.
that come out on Wednesday are going to be just. I think that's what everyone's looking forward
Well,
to, trying to see.
PCE is Thursday, but the quarter over quarter PCE shit is on Wednesday with GDP. But
Yeah, I think.
year over year, month over month. I think PCE is going to be up slightly. I think the range bound prediction for PCE is off.
I think so too.
At least on the
Uh,
primary index. I don't think core will move a lot, but I think oil prices probably pressured. Like gas prices went up quite a lot, like 18%, 19%. So I think for gasoline, I think that'll definitely have some effect on PCE. Usually a sharp one, if last year's any indication.
yeah, it's just there's going to be. I think in terms of what the big players are waiting for in order to determine whether or not they want to signal any kind of sentiment, right? I mean, when they move big amounts of money, adjust their portfolios for the risks in the near term, uh, you know, they need to wait for big data before they start to hedge in advance of that, or like during it, I guess. So I think everybody's just waiting for those big prints to come out, and in the meantime, they're going to hold their nuts and try to make the market go up because everyone's long equities.
Yeah.
I mean, like we talk about people offloading shit, but like offloading your portfolio doesn't mean I sold every single stock in my portfolio, you know?
Yeah, that's true.
Like they're probably underweight or something like that, and then, that's it. Uh, so and that's why market go up is generally preferred, is because if your primary portfolio is long equities and long bonds, then number go up is good.
Yep.
Uh, but I mean, they probably prefer to be longer equities, but at these prices, I mean, what are you going to do? Buy Nvidia at 400 and what is it now? Some
60.
crazy.
Well, I think it dropped a little bit in after hours, but yeah, it's ridiculous.
Jesus.
It's interesting that everyone's kind of on board with that. Like all the longs on the stock have been doing nothing but selling short calls since before earnings, and then doubled down on that since earnings. So at some point this week, I expect the Nvidia will bounce back on short call capitulation as they reposition. So I'm gonna be watching for that. I think 450 is probably, given where earnings peaked out at, 450 is probably a very attractive level to pull back a bunch of short calls. And then
Can you guys hear me?
yeah, I can
Hey,
hear
we can
you.
hear you.
What's up, man?
Okay. Sorry, I've been talking to. I was like, man, everyone keeps talking over me today. This is really rude. And it was because my audio wasn't working.
I'm sorry, dude.
Oh no, it's cool. Um, yeah, no, you guys can keep going. I was just gonna
Okay.
say, with the Federal Reserve of Cleveland, I don't think they expect most of the gas increases to pop in until the August prints, because the print for PCE that's coming up is for July, and they expect it to be pretty low still. So we'll see.
We
So I
will
kind of
see.
I kind of wanted to talk about this with both of you guys here because I think it'll spill over into the things you guys want to talk about. And I know we already talked about it the other night, but for everyone else's benefit, I think over the last few days, especially this last week, we've seen a lot of de-risking of the short Vega exposure. As we know, the primary concentration for this has been at like 4450, 4425, 4400, 4375, 4350. And last week, if you look at Thursday, specifically market open, and then the price action on Friday, you get a very good sense of how they're de-risking these positions, and I think the data that we have currently, at least, supports this strategy, and I think it'll give us a very good indicator of what is going to happen moving forward on the market, because I expect they're going to continue to de-risk this over time as long as they are able to. And so what I noticed Thursday is, we opened and we dropped to about 44.40 on call side capitulation from the overnight move that carried indexes higher. We saw a significant amount of at the money 0 DTE call buying flood in. And as we approached 44.60, we see an even more significant amount of long dated call selling. And in conjunction with this long dated call selling, we see the 44.25 level puts, sold puts, start to collapse as the 0 DTE calls are sold off. And so what I think they're doing is they're pumping the price with 0 DTEs. They're getting it to where the calls are at the money. Then they sell the calls above their current Vega risk. And they close out their short puts with the call credit. And then the price falls. And so by doing this, they're able to go from, short Vega to short long Vega. They're able to use the positioning that 0 DTE grants them by moving the price up to close these at a profit and open these at the highest possible premium. We then dropped to about 43.75. And then we saw a repeat of this exact same thing occur with the 4400 level on Friday. Now the 4400 level still has a shitload of risk despite Friday's collapse of a small part of it. But as we moved to the 4420 level twice during that day, we saw a similar effect occur both times. That was why I was so confident in the end of the day drop off of the 4420 level and back below delta neutral. And in this sense, delta neutral advantages them because they have a market maker that is going long puts, and so they have liquidity to close out their short puts. And then you guys can carry on from there.
Yeah, so I mean, I generally agree with that assessment. I'm not sure, like you mentioned, I'm not sure, how much is left or how big of a component that's going to be moving forward, because there's somebody, it's probably not the same people, but there's still a lot of people that are selling Vega, and so this is, there's no guarantee that it would continue, right? If they get enough of a bid to catch, right, from other participants, and they can just stop and let it ride.
I agree. If they can get a foothold on the upside, or if conditions change and they're no longer able to get out, they'll have to collapse the positions faster, right? But I think for now that's kind of their goal. I mean, obviously, the best laid plans and all of that, right?
Yeah, it'll be interesting because I mean, when we spoke last week and I was super bearish, I mean, the options chain was just going straight down, and obviously for this whole week, we caught a pretty significant bullish bounce, coming off of the last options expiration. And overall, though, I mean, the trend is still continuing to be negative, and from this year's perspective, there might not be a ton of historical downside left on this downtrend, but from last year's perspective, there's still plenty of room to continue down. And so it's a question of, are we starting to leave this sort of sold put environment and transitioning to a new environment, or are we still well in this environment? So this week is actually going to be pretty important to see who kind of gains control of the narrative going forward. Because if this week we see more bullish accumulation on the options chain, I mean, we're going back to 4,600.
I agree.
But if that breaks down, it's going to get a little wild. And so then, I was thinking, there's some momentum they gained on the indices, but they didn't gain a ton. And I think it's going to be hard to continue just pumping those, especially considering that there's just not there's really not much good news that's ever coming out. It's just not that bad, right? That's kind of like the bulls, how they're operating. It's like, as long as the news that's coming out can be ignored this week and people don't really seem to get afraid of it right away, we can keep going, right?
Yeah.
Because nothing's really coming out that's good. And I think that's going to be the continuing idea here, but I just don't think that they're going to be able to turn this around so easily. So then we were thinking, okay, well, what could they do? It another thing too is they've already sold so much vol, right? I mean,
Yeah.
VIX always plummets on Friday. There's an accounting thing because of the weekends. There's always a little bit of a drop on Friday and a rise on Monday, but I mean, it was pretty clear they were selling a shitload of vol.
Yeah.
And so how much more can they get, right? So they sold all that vol and things still don't look that much better, right? So
Well, it's also the level they sold the vol at, and I think that kind of ties into what I was saying, is that they're not aggressively selling volatility
near the money.
on the upside move. Yeah, and it's one of the reasons the bounces are so weak at their peak, is because they're not increasing Vega risk on upside strikes. They're only increasing Vega risk on the downside strikes.
Yeah.
And so, I mean, even from like and obviously that's not all the bulls in the market, but it is the ones controlling the most price action. And if they're afraid to sell vol at 4,400, right, and they're only willing to sell it at 50 and 75, I think that speaks volumes about their expectations, about regaining a foothold.
Yeah, Friday very much felt like them trying to stop downward momentum and not trying to pump. They successfully prevented it from going below 4350, but barely, right? I mean, if they
Yeah,
didn't pump vol, we would have closed the day at 4350.
yeah.
Uh,
We
and
also would have closed
so,
with the VIX at like 18.
yeah. I mean, yeah, they're still aggressively shorting vol. They're still huge on the chart I usually show. There's still that huge discrepancy. We're over 2 standard deviations away from expectation. So either VIX is going to spike to over 18 or 19, or the price is going to rocket. One of those two things has to happen, right? There's just too much. There's too much pull between the two things. They're too imbalanced. Something has to give. But I don't think they can do it with index options directly. And so then obviously the next strategy would be to pump the meme 7.
Or
So that's what Dort,
futures.
yeah, or futures. We were looking at the meme 7. That's what we were talking about when you first popped on,
Uh,
or maybe I was just talking to myself. I don't know.
A
Um,
little bit of both.
yeah, so like Apple's really lost a lot of momentum on the options chain. It really doesn't look like anybody's repositioning for more upside. It's just kind of flaccid. And importantly, the total overall delta, open interest delta, is unadjusted, is dropping, which is usually just indicates less interest from just ultra long bulls who are just going nuts.
yeah.
And that story kind of plays out on all the other meme 7s as well. obviously with the exception of Nvidia, and I think you mentioned earlier you think it's going to go back up. Yeah, I wouldn't be surprised if we see 500 in the next few weeks. Nvidia still has a bunch of momentum.
I really don't think Nvidia is going to go up based on bullishness as much as bulls closing out their short calls from earnings because they're profitable now. I still think we see like a continuation of short call selling by Nvidia longs, but I do think they're going to pull. I think we're in a range now where it's advantageous for them to pull back the calls sold at earnings, and I think that pullback of those calls is going to drive the price up.
Sounds like a great time to pump all the meme sevens while you're at it and just get the indices to start pressuring everything.
Well, my take on the meme 7 or mag 7 was kind of that like they were a bit of a mixed bag. Some of them looked a little more bullish than others, but all of them overall looked kind of weak. I would say that if we're gonna see more bullish momentum pick up on those, then it's probably going to take a couple days for that positioning to build out. Like Apple, like you, I know you said that it looks bearish, but I feel like it's kind of just stabilized. Like it got a little bearish momentum into the middle of last week, and then that kind of gave up on Thursday,
I believe
Friday.
I said flaccid.
Flaccid, sorry.
Not necessarily bearish, but just
Yeah,
lax.
so I think if we continue to trade in this like 4350 to 4400 range, we'll probably see another surge of like bullish interest in the mag 7, maybe towards like the middle of this week, or at least Tuesday or after, you know.
Yeah,
and that lines up with like the unexpected nature of the data coming in. And so, you know, a little pump into the realization of the data might be something to look at. So like especially Wednesday and Thursday where it's just fucking stacked with macro stuff, I could see us, you know, kind of floating up into that data maybe end of day Tuesday into Wednesday morning.
Yeah, I would just say, I mean, the thing that is most intriguing to me is to look at the total delta exposure, the solid purple line. I know nobody else sees this, but
I
just
know what you're talking
the
about.
total delta exposure is trending back to 0 for a lot of these meme stocks, which hasn't happened since Jan.
Yeah.
And so that to me is really significant because it just shows that the overall interest on options is dropping, which would indicate that longs are sort of in, right? I mean, obviously they can get more in, but they're already in, and
Yeah.
they've sort of maxed out. At least we've seen just about the maximum of what they can pump into it. So I'm really, yeah, I mean, we could quibble about what we think, you know, is bought or sold, but I think overall, as long as the interest dies, I think price will deflate. So it'll be interesting to see. Obviously, Nvidia is the one exception. It has the highest delta that we've measured pretty much with, you know, there's a little bit of volatility around options expiries, but it's pretty much
how's
still
Tesla?
maximum interest. Let me take a look. I don't generally look at Tesla
I try to
because it's
avoid
so
it.
far down the list. I lose interest by then. Tesla's been declining for a while actually.
Yeah, I know.
It maxed out on July 19th, and it's just been kind of, the total delta's also just been kind of dropping. I mean, everything else looks sort of trending down, but choppy. Like it's hard to tell. You know, it's obviously unlikely to just
I was
plummet.
interested in that Vega exposure on Tesla is very close to moving positive.
Yeah,
And
yeah.
that's
There's been some
super
really tough.
super fucking bearish, right?
Yeah, I mean, I think the takeaway here is that it's just nice to see some of that insane bullish momentum start to unwind a little bit.
Yeah.
Because I don't know if I could take another 6 months of that.
Well, yeah, there was no way to push that. So to bring it all back, like I think that in terms of like the whole short Vega, unwind and all that craziness, I think that there becomes a point, and I think we're getting close to it where, I mean, it becomes kind of like a short collar, right?
Yeah.
So I mean, if we end up stabilizing, right, then it's you everybody kind of catches a bit of a break, right? As long as it trades sideways, SPX that is, no one really has to freak out and do a bunch of rebalancing or anything. But because of the short nature of it, right?
It gets
There's
more like stabilization now benefits the bears instead of the bulls.
Yeah, exactly, and
Yeah.
and also that the stability of it because of the short nature is like balancing the marble on the bowling ball, right? Like you can only do so much to move the bowling ball around to keep the marble on top, but eventually that marble's going to fall off, and you don't know if you necessarily want to just let the marble fall or if you want to try to roll the bowling ball to hell and back to try to save your little marble.
Yeah.
Tell me more about your little marbles, Dork.
Dude, they're the smoothest marbles you've ever seen.
One of them, I know for a fact, one of them hangs lower than the other two.
The other two.
Jay Fresh is paying attention. Yes, the other two. Yeah, it's. I mean, like like Jay Fresh said, it is just like it's a little relieving to see that we're not just in a full-on crazy bull market of fuck you, I'm buying everything I can because fuck the world.
Well, they have no money left. So
Yeah,
Well, that was another. I mean, Mama Yelly's selling some duration next week.
yep. I know the 7-year, right? Is it the 7 and the 20 and the 30?
I think. I don't know how much she's selling on the 20 and the 30, but I think between 2, 5, and 7, she's selling like $180 billion worth.
Let's see what we got.
Yeah.
We got 2 and 5
So
tomorrow. We got 7 on Tuesday. 17 week on Wednesday. 8 and 4. Okay, yeah. So a lot of duration being sold in the front half of the week. Interesting.
yeah, so I'm excited about those. Get some notes out there.
Yeah.
Uh,
Let's increase that debt load.
yeah, nobody seems to care about that.
well, the debt is what makes the economy grow.
Yes, it is inflationary at this point. I think it's fair to say. Well, maybe we're still kind of on the cusp because the RRP's been dropping pretty substantially, hasn't it?
Yeah. Yeah. RSP?
I'm not quite
Like are you talking about the or RRP?
RRP.
I could look. I haven't looked at it in like a week or two.
Yeah, it's like obviously it's not plummeting, but it has been continually.
Yeah, it's
Well,
plummeting. It's just
it's
actually
plummeting.
plummeting.
Yeah. So
Damn.
from the end of May to now, we've dropped like $500 billion.
Dude, we fucking dropped like 200 billion in the last week.
Yeah, so I mean, to me, this is a little strange because I guess because she's selling such short-dated bills, maybe the money market funds and things are just pulling from RRP and buying bills.
Well, here I got a
Because you might think, I mean, as a money market, you might want just a little bit of duration, right? You don't want it to all be overnight because that can go away if something happens. But if you get just a little bit of duration, then you get a little bit more trickle out of the hose if the market shits the bed.
Treasury general accounts at 413 billion. Treasury deposits at the Fed 501 billion.
So this will be an interesting week for liquidity as well, right? I mean, there's been a lot of people talking about net global liquidity and net US liquidity, basically just looking at how much money is out there to spend on stocks and shit. And, it's been declining while stocks have been going up, and people haven't been quite sure, what are they missing, right? But it'll be interesting to see if this is enough of a liquidity suck to have a negative impact on stonks, right? And this might have some effect on the total number or total amount of interest on the options chain, but we'll see, because $180 billion isn't nothing.
Reserve balances have been starting to drain out a little faster.
Reserves for who?
Other factors draining reserve federal balances, banking reserves.
Reserves are draining.
Uh,
That's not
no,
good.
they're up a little. Not a lot, but 100 billion or so. A little more banking stress.
Yeah, I got a few charts. That, I mean, I don't know if they're necessarily going to shed light on the whole international liquidity front. But in terms of, so Janet Yellen's going to be selling a bunch of treasuries, and obviously that's going to have a negative impact on liquidity. Either she's going to spike yields, or people are going to have to dump money in to keep yields from spiking. One of the two.
Yeah.
So that's going to have a negative impact on liquidity. But when we look at something like, say, I have my last chart I just posted is the high yield and AAA spread.
All right, hold on. Let me set this up so we can all see it.
So
Yep.
our spread is still pretty high. Relatively speaking, it's not like crazy high. I mean, if you look at like 2020 or something, like it goes way higher. But we have an 865 basis point spread between high yield and AAA. And it hasn't been going down very aggressively, since the beginning of the year. It came down a bit, right? But I wouldn't necessarily say that it's indicative of very much of a recovery. Considering where the stock market has gone, we should be seeing these yield spreads just freaking tank, right?
Yeah.
If people were actually bullish. And so we can look at these spreads and also look at the above chart, which is the Treasury and agency securities, mortgage-backed securities, all commercial banks.
Yep.
And you see that those MBS holdings have been dropping now, and we're at like minus 325 billion year in MBS holdings. So, I mean, in terms of how liquidity is looking, it still looks like there is a negative flow out of just markets in general. So, and this may be related to the declining M2, right? Where you just have a slow bleed of deposits.
Well, it's
with
also the Feds selling MBS
yeah,
at what, 60 billion a month or something like that.
Yeah, I mean, but this has been the conundrum for months now, is liquidity has so clearly been leaving all of the markets as all of these obvious forces play out, except the stock market, which has just defied all of that for months. And so people are just waiting to see if it's ever going to come back to reality, right? And I think the only way that you can really resolve this discrepancy at this point is leverage.
well, yeah. So to that point, if liquidity leaves the market, if you think about it from an L2 perspective, like on the order book, low liquidity means your bid ask are not going to be as fortified as they once were. So from an equity market standpoint, with really with super liquid securities, right, that see a reduction in their liquidity, what it means is that it takes less of a capital flow in order to blow out any fortifications that do exist in the layer 2 bid ask, right? So you can essentially, with low liquidity in the equity market, you can feign good liquidity just by making the market. But then if you want to push prices up, all you got to do is just blow out the ask side every once in a while, and just stair step the market up, and then continue to make the market as normal, right? As liquidity kind of sort of moves back in, refortifies around the current sort of trading range. So the equity market, in terms of trying to extrapolate liquidity from it, and this is kind of a something that I've been trying to keep in mind with my my liquidity index, is that when liquidity drops in the equity market measurably to where these sort of white paper sort of descriptions of it even indicate a drop in liquidity, it's almost like a bigger warning sign than when it says liquidity is all good. We got a bunch of stuff going on, because it's pretty easy with an illiquid environment to create filled orders that feign liquidity, just purely by the fact that there's not enough capital in the market to move against you.
Yeah. No, I understand. Yeah, I agree with that. I think and that's why I'm kind of looking at the total delta and interest on some of these larger names start to deteriorate, because I think the thing that's going to unwind this is bulls themselves. I think people who, last year, most people that were going to sell sold, right? That's why there's just not a ton of going down, a ton of negative pressure, because there's nobody left to say, "Ooh, the price went above my target, I'm going to sell it," right? Except the
Yeah.
bulls. Bulls kind of have to make this decision for everybody at this point, which is why crashes happen.
So we're waiting
Yep.
for Tom Lee to capitulate.
He'll bag
Which
hold his investors' money forever.
But what's really interesting is if you look at it's so clear that it's all just a pump of the meme 7. And it drives me nuts that I haven't seen, an infomercial from the SEC and Gary Gensler yet about the dangers of investing in
Tech stocks.
meme names like Apple and Nvidia.
Or zero DTE options.
They don't have enough funding to make a video this year, but it's in the budget for next year.
Okay, yeah, but I'm looking at
on my sources, people familiar with the matter.
Yes.
I love those guys.
Because I'm looking in general at just like the frothiness of the market. If you look at S&P 400 and S&P 600, they're at like 5, and you could argue 10-year lows in terms of valuation.
Yeah.
And then if you look at the S&P 500, it's obviously not as crazy as it was right after they dropped a fuckload of money on the market, but it's still pretty far up there. I mean, it's, with the exception of the 2020 to 2022 when all that money got pumped in. I mean, we're at like 20-year highs in terms of market valuation, and so you know it's just a matter of will this ever actually collapse or not.
Yeah.
I mean, when you look at the fundamentals, right? So in terms of PEs and all these other metrics that everyone says hasn't mattered since 2010, we're sort of kind of where we were back in 2021 at this point, right? And the real question is whether or not, and this may be, and this I'm at the risk of sounding like walking when I say this. How hard can this market get pushed before everyone realizes that they're being stupid, right, and that they're the sucker, right? Like it's like you have companies. I mean,
Right
Apple
at the start of the crash.
well, like Apple trading at like 25, 30x its cash flow, I think is honestly somewhat fair, right? It probably should be priced closer to 20. But Nvidia, even after its earnings or its cash flow went up, and I'm not going to talk about the merits of that cash flow increase, but even after its cash flow went up, it's still priced at around like 90. I think it's priced at 90 times its cash flow, right? So
I don't know. People are already playing ridiculous games with their EPS and forward, it's forward EPS to get it to look better.
yeah, and non-GAAP too. I get that, but the question is how long can that be sustained? We're back at an interest rate environment we haven't seen since 2006, right? Like it's just in terms of like actual cost of money, and even to that degree with inflation, real rates still are not very like tightening, right?
Yeah, we're barely
So
positive.
yeah,
Hey,
so
speaking of, sorry, this is something I wanted to ask Girk real quick.
Hmm.
When does Nvidia have to? Because you just talked about their cash flow. When does Nvidia have to drop their 10Q? I'm aching to look at that.
Have they not yet?
I
No,
think they have.
I'm on Edgar right now. I don't see
We
it.
should have like 72 hours from earnings. I believe.
I see Feb
Did
24
they
and May
apply for any
26.
extensions?
I don't know. Where would I look for that?
The investor relations website should have it. Should auto populate there.
Yeah, the rest of their
That'd be
on the
that'd be really fucking weird if they. Well, I mean, I guess they
There's
announced a
an
share buyback, so it wouldn't be that weird the delay in the 10Q, but odd from such a
there's an
large corporation.
there's an 8K.
Okay, what's the 8K for?
I don't know. Where's
Should be-
issued a press release announcing its results for quarter.
But they didn't release their 10Q.
It's not on It's not on Edgar.
I mean, so earnings was what, Wednesday night, right?
Yeah.
So they should have to have the
publish
10Q
Monday.
out. Yeah, it should have to be out by
Oh
tomorrow.
yeah. So yeah, their 10Q is not out yet. I'm on the investor relations page. They haven't released their 10Q.
Why the fuck do they delay it?
Probably because they're trying to figure out how to hide all kinds of bullshit.
Whoops.
Dude,
Well, I mean, they're. I mean, I know you didn't want to talk about this, but there's some fun stuff. I
really
mean, obviously the tinfoil is nice, right? Their costs went down.
Oh,
Right,
did you listen to their earnings call, Jay
quarter.
Fresh and Dirk? Did you guys listen to the earnings call?
No.
Yeah,
You should
unfortunately.
have, dude. So one guy. So there were
I
a
read the
couple.
transcript, but I didn't fucking. I'm not gonna listen to them say AI that much.
So there was a couple people on the call who actually asked some pretty good questions. Okay, related to growth.
But they answered none of them.
Yeah.
Yeah. So the most telling one to me was when one guy said, "Hey, I just want to know why you guys are so confident in this this kind of growth. Like how are you so confident that there will be enough applications of generative AI to support this continued growth for the next 1 to 2 years?" And Jensen Huang, his response was, "I'm not going to speculate on the future of technology." Like that told me everything I needed to know about their projections, about all this shit. Is they're just what I heard from that was, "Bro, I'm riding the wave. Go fuck yourself. I got mine."
Yeah, I mean, well, look at like Jensen's management of blockchain, right? Like when blockchain was the hot buzzword. Like Nvidia was all about blockchain, and then Jensen sold and they split the stock.
Oh my god.
Hold on, I can find you on the Nvidia chart where Jensen last sold shares, and I guarantee I'm only off by like a couple days. Let's see.
The funniest thing too is their stock buyback, right? Like, why are they buying back their own stock right now?
They're not. They're
I
not
know.
going to buy it at these prices.
It's a rhetorical question.
It's like he sold
it's
like
like
right here.
I'm not watching the stream.
Your cock
what
block
price?
with the
Oh,
treasury chart.
I gotcha. There.
What price are you pointing at?
He's probably pointing at a part where Nvidia goes down. Yeah, there it is.
Yeah.
Yeah, Jensen time the top, of course.
It's Jensen's gonna be selling some shares soon.
He's going to be
I
sharing them
wanna-
into his company's buyback.
I want to meet the cross-eyed person that bought Nvidia after hours at 519.
I mean, it was probably just a market maker, right?
Or Tom Lee.
All right. Okay, that's enough of Nvidia. We got our Nvidia.
All right.
Yeah, okay. So
I don't need
I'm
to be
just
more
interested-
bearish on this stock than I already am.
I just wanna
for the
see-
sake of my financial future.
I just want to get some more color on how their costs went down, right? I mean, I know their profit margins on their H100s are insane, but come
Well,
on.
you know, believe it or not, it's really cheap to not manufacture anything.
that's what I'm interested in, right? I don't know if I'll be able to dig it out of the data, but because I mean, compared to all the other companies, it's so strange how little information they publish with the quarterly earnings. Most of them publish pretty much the whole 10Q info on the day of.
Commodities are completing their infinitely slow recovery right now.
Oh, that's good.
So that's interesting, at least. And
Okay,
the
back.
correlation's starting to pick back up again. Yeah, that's still that's too hard to figure out.
What the hell's going on with Dixie?
It's rocketing because credit conditions are tightening like crazy.
I'm excited. There's so many good things. It's like
they fought back against that so fucking hard this week. If you were watching,
I know.
if you were watching spreads, holy fuck, man, they pushed back. They pushed back against Dixie just with everything they had, and it doesn't care, right? Like no, that's like one place where pumpers just have no agency, right? You're gonna start competing against like central bank swap facilities and shit, and you're out. You're not big enough.
Yeah.
And
Oil was real fun on Friday too. That was
yeah,
that was a ride.
oil came back a little bit. I think with commodities coming back into the picture again and kind of moving into the next phase of their recovery, I think we'll start to see oil climb back up again. Maybe starting this week. I'm gonna go long some commodities this week, I think. It's starting to look a little more attractive.
So full port wheat.
How dare you? But maybe,
You're right, yeah.
maybe.
We'll
we'll see.
I like potash still, honestly. You know, in terms of like a way to catch the tail effects of increases in oil prices. I like it.
Increases in nat gas prices, right?
Yeah, it's true. Yeah.
Nat gas. Let me take a look at Henry Hub. 'Cause I know these moved up with the. Yeah, nat gas prices are ticking up a little. They still look like shit, but they moved up on the monthly. So yeah, a little bit of recovery on nat gas. With the inventory information that came out wasn't so positive as everyone expected, and the Eurozone's expecting a colder winter. And if that happens, oh Jesus Christ, inflation's gonna skyrocket.
Oh yeah, for sure.
So when does Japan start to get jiggy with it here?
Well, their
We're
Ministry
up
of
at-
Finance has said yen 150. They're not gonna really push back unless the yen hits 150. But that's happening. That's just gonna happen really quickly, right? Because now they've announced like where they're willing to go, like short dollar, long yen. So now everyone like all the speculators are just gonna push for it to happen as fast as possible.
Yeah,
it
and
could take less than 2 weeks for that to happen.
Yeah.
so this kind of segues into the of those other two, Girk, where I've put the spreads on there. It's on I think it's on the daily chart.
That's on the top
and
one.
then yeah, and then the yield and like
This
the
one's
vol
like
term.
too bearish to look at for a long period of time.
I know. I have to tamp myself down because these effects are like so long-winded. But what the interesting part about this was, well, one, the the 2-year and the Fed funds, continues to contract, which tells me that the yield curve is starting to try to correct,
Hmm.
right? And that's the green line. But interestingly enough, the yen dollar spread, because the dollar has been strengthening so much as yen went up on Friday,
Yeah.
that spread did not widen as much as you would expect it to. So while we may see the yen go up, the yen go down relative to the dollar, we may not see the spread blow out much more. I think we've sort of hit almost like the limit in terms of how much collateral one could drum up from the Japanese banks.
Yeah.
Uh, so, I mean, whether or not USD JPY to 150 is really the Alamo for the Bank of Japan,
Ministry of Finance.
the Ministry of Finance. It may not matter as much. We may already be sort of hitting those ceilings anyways, and any pushes beyond that are sort of just kind of tilting at windmills. That's kind of
Yeah.
my concern going forward the next like
Well,
3 to 6
don't forget the amount of risk that's also carried in the Fed staying flat. And this is something that, like, I feel like we don't get to touch on a lot, but flat is very bearish, right? Because it means that there's no additional wiggle room in that spread. So if they went up 0.25, that increases the spread. But if they stay flat, the spread doesn't increase, which just means that risk, like if the Fed intends to stay flat into the future for however long, that just means that all of the risk becomes one-sided, and it's all just about inflationary pressure on the Bank of Japan at that point, because this side of the spread curve on the U.S. dollar side is just never going to get better.
They also the
It
Bank of
doesn't
Japan,
present as much risk as a cut, which would collapse the spread, but it still adds a significant amount of risk to the trade.
yeah, and the Ministry of Finance or Bank of Japan, whoever, did indicate that they were probably going to increase rates at the beginning of next year
Yeah,
already.
well, I read the same article. That's like an analyst expectation. I think they'll be pressured too long before then, because if energy prices continue to rise, their inflation rate is gonna keep their inflation rate's already moving up really quickly, but
Well, energy prices.
energy's gonna weigh on that really heavily, because it's, for Japan, that's like one of their largest costs, right? Like they import almost all of their energy, like all of their natural gas and oil is imported, right? At least the US has like a little bit of a fallback on our own production. Japan has
And
none.
to compound that issue too, if the dollar continues to strengthen with rising energy costs, and that
That'll
inflationary
increase
pressure,
that,
yeah,
yeah. You get an exponential effect from dollars going up on
yeah.
it.
So it's a double whammy for them, right?
Yeah.
If facing a weakening yen at the same time, or a strengthening dollar at the same time that energy costs are going up, I could see them stepping in a little bit quicker, which would, yeah, I think we're really, as a nation, right, as a consortium of participants, almost a composition of men, you could say. We have really pushed our system, to the max. It's almost beautiful. It's kind of like watching a drag race, right? Those cars where the
Yeah.
engines are just so perfectly tuned to push to the very edge of their engineering limits, right? We're right there. We're there, you know.
But unfortunately, we're seconds away from it seizing, right? Those
Oh
engines
yeah,
aren't meant to run at peak efficiency for long periods of time.
yeah. I guess it's more like the big rigs that they like super duper ultra turbocharge, and then you see the entire engine of the big rig just explode out of the truck. because it's just running so fucking hard with too much torque. We're really there. Like, I mean, not necessarily the engine's going to explode anytime soon, but like that, this is an extremely well-oiled machine that is not only working as intended, but now is the point where it's like nearing the end of the race, where the coach over the radio talks to the driver and says, "Hey, man, I really need you to push it these last few laps. If you want to win this thing, you're gonna have to. These tires are kind of, they're worn out, but I need you to push harder than you have been."
Entropy.
And it's just I mean, it could work. Like if it works out, right? Like if this works out, it's going to be incredible. And the rally we could see off the back end in the event of a soft landing would be. It would literally be it would be like a one for the ages. But in terms of the economic fundamentals, in terms of
JPEG
earnings
didn't
multiple,
say soft landing at this meeting.
he didn't. He said all I heard from him in all those sentences, he said all I heard was higher for longer.
Yep. There's no
So
more. There's no more soft landing.
No, he's pretty much going to keep rates where they're at until
someone holds the bag.
Something bad happens. Really,
Yeah.
He's got no choice. I mean, if inflation reignites, I mean, that's his only choice is to just
keep going higher.
Yeah, the market's not really pricing that in. I mean, the Fed funds futures pretty quickly priced kind of some of that in, but the equity markets have not. Probably because they thought, well, we priced it in 2022, so why would we price it in again? Whatever that means, but I don't know. In terms of the amount of dollars flowing through the market in order to keep bond prices from falling too much while also not rising much, and at the same time keep equities inflated enough to keep balance sheets looking sexy. I just don't know if that continuous flow of money into those asset classes can continue with deposits dropping as they have. And if the dollar yen spread continues to collapse, which is merely a proxy for the bond market.
Yeah.
But as that sort of spreads continues to collapse, the access to the collateral needed in order to create a continuous flow inward to counteract the flow outward may be overpowered.
I mean, I know it's bold, but I really want to say that the top is in. We're beyond 600 days from the S&P's previous high, and we haven't realized it. And I'll say that the bounce that we got and the peak that we got, those are really the signs of a healthier economic system, right? People should believe that recoveries are possible, and that if things aren't bad for long enough, then things should recover, right? And like these not really double dip recession, because we didn't officially get a recession, but periods where you get a bear market following a bear market, right, with really no significant break in between. Those are bearish across 5, 10, 15 years, right? Because that's very similar to what happened with the Great Depression. Is everyone kept buying back in, assuming that things were going to recover and get better, and then just crash even harder. And that happened over and over and over again until everybody was broke.
Yeah, and we could, I mean, to point to this not be like, and you're right, a healthy expectation is for a recovery, and it makes sense, right? The idea is that you have faith in the nation being able to pull the rabbit out of the hat, like we have done 9 times out of 10. But looking out beyond America's economic data as well, I think you and I touched on this one of the
Germany.
nights. Yeah, so China and Germany. Yeah, Germany's economic data is just absolutely god fucking awful. Like I don't know if we have any German pickles in the jar, but
we do a few.
Yeah, I bet they're too busy, shining shoes on the street to come in and
It's
comment
not
on how
that
terrible the
bad.
situation is. It's
It's
not, but it's
getting
but the
there.
numbers that
Yeah.
are coming out are truly terrible though. They're bad. Like,
I mean, they're also a little more transparent with their financial data.
yeah,
So, I mean,
it's a
our
decent
numbers are
document, but
probably just as bad. We're just not shining a light on it, right? We revise
well,
everything in the past so that no one looks at it.
yeah, exactly. Yeah, once they've already looked at the data, then you revise it so then they don't notice. Yeah,
Yeah.
but I digress. As one of the biggest economies in the world, when they're in the shits, I mean, I get the permeable thesis, dollar reserve currency, blah blah blah. But China's economy, absolutely in the shitter. They're literally in the midst right now of a financial crisis. You got Germany's industrial data that just looks like they are in some sort of economic recession that is severe. I'm not going to say a depression, but it looks like it's entering into a severe recession at this point. I it just it doesn't look like we're getting the recovery we would need in order to support further inflows into the market, like just in general across asset classes. I just don't see anything that just makes me feel like, yeah, man, this our globe is recovering, our
You
exports
don't
are going to start getting bought up, it's going to be great. I don't see that.
you don't think the Atlanta Fed predicting a 6% GDP estimate for this week is bullish?
No.
That's a
I'm
base
kidding.
effect thing though, Jay Fresh.
I think
I mean,
That's
there
like the
has to be
most.
something
So the
wrong.
economy overheating. That's what Japan's experience. So I just wrote all these down so everyone can kind of follow along. So China's shitting the bed. U.S. economy is kind of stagnating into the second half of the year. Japan's heading towards hyperinflation, especially if dollar increases and energy prices surge because they have no central bank rate to moderate it. So Japan needs to try to push their economy into a recession. Germany's in a recession, and I want to talk about that a second too. And then Great Britain's kind of they're flat like the U.S., but they'd like a recession too because their inflation isn't coming down
I would
with
I would I
increased
would
rates
describe
either.
I would describe I would describe Britain as stagflation.
Yeah, yeah, probably. Yeah. I mean the U.S. is kind of stagflationary too.
Not as
Um,
explicitly as Britain though.
yeah.
England has been just it's just so obvious that they're in an economic downturn, but their prices just will not go down.
So I
You know,
mean, I think this, especially like Germany's recession, is going to be really interesting over the next 6 months, because they are officially in a recession. Most of the eurozone is entering one, although they haven't all caught up. But Germany's by far leaps and bounds the largest economy in Europe, and the fact that they're in a recession now, in order to prevent that from deepening, they're going to need to start to ease rates, and that's going to put a ton of pressure on the US to do the same, which in turn collapses the spread with Japan and forces Japan to move their interest rates higher. And I think Germany, like if nothing else triggers it, which something else probably will before now and then, but if nothing else triggers it, Germany eventually will, because the ECB needs to support the German economy, in order to, continue to do what they do, right?
I just got to say it's such a like imagine being in Japan's shoes right now where you're getting like the first real tastes of somewhat of something that reflects economic growth. And it's
You have
on the
to
back
crush it.
it's on the back of the global debt market just like leaning on your goddamn banks. It just sucks. Like you, they cannot catch a break. I mean, they put themselves in this position though, ultimately, right? Like
Yeah, yeah, they did.
by being this backbone of the global credit market, you put yourself in this position where you cannot let your currency devalue too much because if you do, it's the entire world is just going to squash you like a cockroach.
Yeah.
So interestingly, I was digging into the GDP now from the Atlanta Fed, trying to figure out why they're predicting 6%. And it looks like a big component of that huge spike is residential investments, which
Wait,
is shocking to me.
us buying 0 DTEs?
No.
I know, I'm kidding.
Re-
Us buying Airbnb houses.
I mean, I guess it signifies why Warren Buffett bought into all these housing stocks, because they're, I guess, producing like gangbusters.
Home
'Cause they,
home builders are super bullish right now. I'm not gonna lie. I kind of like home builders.
yeah, well, they bumped the residential investment portion of the GDP now estimate when on August 16th, when the housing starts, an industrial production data popped up, and then it's dropped a little as existing home sales and new home sales have come out. So I think it's sort of like there's a boom in new housing starts right now, which seems strange to me, but I
I don't.
guess, I
So
mean,
I think the data is skewing it. I don't think that's necessarily the case. Like
That sounds biased to
we had
me.
that big bump that 1 month, but it like immediately fell afterwards, and I'm pretty sure that got revised down, didn't it?
I don't
So
know.
it sounds biased to me because like overall home sales are down like 25 to 27% year over year.
Yeah, we're at
Yeah,
like
well, so
our
that dropped it.
lowest like
So
real estate market interest since like '95 or something right now.
it peaked on new home starts, not new home sales.
Yeah.
So that's
Exactly.
the
Yeah, that's why I
key,
say it's
right?
biased.
If it's just starting now, right? If there's just this boom of housing starts right now, it wouldn't show up in the sales for another month or two, right?
Well,
No, it would probably take longer.
but here's the question: you get a big spike in new builds, right? But then no one comes along to buy them.
Yeah,
Yeah,
Because
those homes
that's
have never
exactly
been
like
approved.
that's like
Yeah,
exactly what hit the tape in '08, right? Was we were just
yeah. No,
building like crazy, and then all of a sudden no one showed up to buy them.
well,
yeah. Well, I think that's. I mean, the net effect of this is that it's just going to cause all housing prices to plummet, right? Although I don't know. I mean, Warren Buffett's got to be thinking something.
well,
Otherwise,
so Warren
this
Buffett
seems
is.
really
I think
dumb.
I think Warren Buffett is bullish on home builders, but and this is a really interesting question, right? Because
But the home
you're
builders should
right.
be holding the bag if there's no one to buy their homes.
Nope,
Not exactly. Not
subsidization.
exactly. It all depends on their margins. So home builders are more sensitive to like their home builders are sort of like the intermediary between commodity prices and home prices, right? So if they're able to build these homes and they think that the profit margins give them enough wiggle room to be able to sell these homes at a discount, but
I
still at a
mean,
healthy
their
margin.
profit margins are insane right now.
Yeah, so you're right. So this tells you that yeah, there could be an appreciable drop in home prices if these home builders are willing to sell at a discount. But how far down are they willing to go, right? And 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 not only that, but and this is the big kicker is how far down they're willing to go. Is the discount accommodative for a leveraged buyer who is going to be buying at a 7.25% mortgage rate on the
Ugh.
good end, right? And that's the real question, right? And so, it could be like 2008 where the volume just doesn't come in. You see these homes go on the market and then they just don't sell. You could see a small spike from some leveraged buyers seeing enough of an advantage to be incentivized. Uh, and you will see a spike because cash buyers are going to see a little discount and buy the dip like they do with stocks. And then they're going to go and turn them into Airbnbs or whatever. But
I think Buffett's just playing the business cycle on these, right? Like
yeah, yeah, for sure.
commodities prices were
Absolutely.
low, they built and sold a bunch of
Yeah,
houses. That's going to
he
get
could be
reported in
swinging
the
it. Yeah.
yeah, in the latter half, and then because I mean where we're headed with commodity prices going up, housing supply low, and housing costs high. I mean, it's the perfect recipe for like home building subsidization by the government, right? Like within the next like 3 to 5 years, we're gonna need subsidy programs for home builders.
They're gonna do them for slumlords. They're not gonna do single family homes anymore. There's not enough space.
I mean, it depends where, but yeah, I would say for the most part, it's probably going to be like well, it depends on how heavily subsidized, right? Like, are we talking like late 70s, early 80s, right? Where we're going to start building out like projects, or, something lighter like post 2008 through like 2012, where, it's more a cost subsidy, right? And that'll
So
just depend on how hard the market tanks.
so the trend I've been noticing, and this may just be in my local area, but some people have been talking about this in other areas, is there over the past 2.5 years, there was a big shift from you know there was a big shift from your conventional housing system to these luxury apartments
Hmm.
in downtown areas, and they're built, right, or they're being built currently.
Yeah.
They're going to come on the market, and because they're quote unquote luxury, they're not going to be affordable.
Hmm.
And so I have a feeling that some sort of subsidization is going to go towards making those quote unquote luxury apartments more affordable for the average.
That's already happening in New York City. So I mean, New York City is a good market to look at because the turnover rate's so high, right? And but most new construction in New York has some number of like defined rent controlled or rent stabilized units, and they get like a big break on their taxes for, if like 10% of the units are reserved for, and they make them like less nice than the other ones. um but New York City's already well, developers are already moving to like try to expand the number of they're trying to expand the number of like rent stabilized units in each building so they can open up more of those to those subsidized rent policies,
Yeah, that sounds like
because
a
property taxes on these places aren't getting any cheaper, right?
yeah.
So they need to find something through local government in order to pad their cost to carry these properties.
Yeah, and that's a big aspect of cap rate that needs to be considered when we talk about this too, where there's the cap rate that has to do with your interest rate in a conventional loan to buy the materials to build the property, or to buy the property to rent it out. But there's also the property tax on top of that, and everyone who bought in 2021, 20, who bought at a nice low price, maybe their mortgage may be really attractive right now, right? And even the people who are renting out the properties, but as their homes get appraised by the government, at these higher and higher prices, their property taxes go up accordingly as well.
Yep.
So, your cap rate goes down proportionally, and that's another thing, is that pressure on renters, and that's kind of why rent prices really, they've gone down a bit, but they really haven't appreciably dropped, is because everybody's property has been appraised at some crazy high new level. So you can't just drop your rent, to try to get someone in, and to try to reduce that turnover rate, and increase or reduce your risk at the same time.
Yeah.
Um,
Yeah, I mean, I think what's happening, right? People were getting really excited about housing prices dropping relative to the very high rate last year. But I
Hmm.
think a lot of that was just people who wanted to buy a home were just delaying it a little bit, expecting prices to get better by now. And now that they haven't, they're just biting the bullet and going in, because you can see that. I mean, the people who were, I mean, July was kind of like the beginning of the end of the demand zone last year for housing, and then the sale prices started dropping quite dramatically from July to, January, about February, and then this buying season, it's been much more tepid than last year, but it's continued now longer. So after last year when it peaked and started dropping, it's ours is still kind of meandering upwards. And so I think that's throwing off all of the seasonal adjustments, and a lot of the people who are looking at this from like the bullish perspective, saying, "Oh, housing prices are dropping from this very high spot." I think it's going to turn around again, and it's gonna put a lot of pressure on the Fed. But yeah, I think housing is going to be real interesting going into the end of this year, and I think
So
that might
go
be
ahead.
one of the things. I think that might be one of the things that starts to scare people.
So this demand zone that you speak of, was that calculated using VOEX or Anemoy?
It's based off of the triple clusters around
Velo,
Velo.
Velo triple clusters.
Yes.
God, what a load of horse shit.
Dude, that's
That
compelling,
fucking
man.
it just makes me it makes me so mad because it's just like at what point I really wish the SEC would redefine that. I mean, it would be a big pain in the ass for me because like we present data and stuff, but like the SEC really needs to redefine their definitions of fraud in the social media environment because that kind of shit should just be fraud. Like if you can't,
It
if you're
is.
not disclosing your formula, and telling people what you're actually showing them, like, fuck you.
You better be doing it for free. That's the
Well, I
way
mean,
Yeah,
I
you better
think,
give it for free,
yeah,
right?
I mean, I think in the spirit of what fraud is, it's fraud. I don't think that's a very controversial statement. It's just simply not codified into law.
Yeah, but it is supported by the essence of that law. There's just not there's never been a lot of protection on that front for investors, and I think it's always been kind of bullshit. But so many real like financial like big financial products would be unsellable. If you told somebody, oh listen, this ETF's great, we're gonna take 3% fees on your 2% gains, less people would sign up for it, right?
Yeah.
So I mean I understand why there's a lot of pushback against that, but they really do need to redefine a lot of that because
Yeah.
it's getting out of control,
Yeah. I
especially
mean,
with all the money in the system.
people just need to start using the fib levels like you've been telling them
Oh,
all along.
fuck you.
Oh
All
Hey,
right,
they're moving
so
for free.
let's do projections for this week. Who wants to start?
God.
Let's
I
do
mean,
it.
I could not have been more wrong last week, so I feel like at this point I'm just gonna throw a
Was
dart
I
at a
right last
dartboard.
week?
Kind of. You were the
It was somewhere
closest.
I was
between
the
you and me.
closest, right?
Yeah,
I
I
won
was.
because we didn't go down hard.
Yeah, we didn't go down hard for the week, and so you win. Like that was really it. But it was flat, right? So I mean, if anybody won, I don't know who it was.
I mean, my projection for the week I think was flat. It was just like down and then up and then down again.
Or something like that. Yeah.
Yeah, I think
Well,
we all thought down on Monday. That was where it all, kind of came off the rails.
that was the basis of the basis of my projection was Monday failing. I had to be the contrarian. So, my basis was Monday fails, and then we take a big shit Monday, Tuesday, and then flatten out. But we ended up just stabilizing, which is, what market's going to tend to do, especially
Yeah.
on downtrends. So
All right,
yeah, I
we'll
think.
let you start this week so you don't have to be the contrarian.
Thank you. Yeah, okay, that would be great.
Because I know by
Um,
the time me and Jay Fresh are done talking, you're gonna be like, wait, I want to go the other way.
uh, hey, what are you saying? You saying I'm some sort of flip flopper? Okay. So probably I'm pretty confident in terms of Monday, Tuesday. So Monday, definitely flat. There's nothing really happening. Um, unless something crazy comes out, it's just going to be
I'm
flat.
telling Mama Yelly that
Yeah,
you
get
think
Mama
nothing's
yelling
happening.
with your big old bill auctions, but I mean that's you can adjust for that and keep things flat as you allocate capital for that kind of shit. So that's fine. Tuesday, there's nothing really happening. So Monday, Tuesday, I say flat. And then Wednesday, Wednesday is where we're going to see a big bifurcation in returns. And in terms of whether or not I'm bullish or bearish on the economic data, I want to be bearish on the economic data. So what I'm going to say is Monday, Tuesday flat, and then Wednesday through the rest of the week, we drop another 75 basis points or more because the economic data is bearish. That's basically that's what my projection is. There's nothing really happening, there's no big expirations happening, no earnings, nothing crazy. So the only thing that's gonna, in my opinion, affect the market is gonna be the economic data, and Wednesday is the big old dump. So we're either gonna get a bunch of bullish momentum or we're gonna get a bunch of bearish momentum, and it all depends on that.
Okay. But your projection is bearish.
Yeah,
Okay.
I'm just gonna, for the sake of a projection, I'm gonna say the economic data is bearish, and we drop 80 basis points or more, or 75 basis points or more from Wednesday to the end of the week.
Okay. J-Fresh?
I see this week as being a pretty volatile week that doesn't go very far in either direction.
Okay.
So I'm gonna say I'm gonna say it's gonna go down in the first part of the week and then be choppy, but I think we might I think we might close the week below 43.50.
Oh, shit.
Hot diggity dog.
All right. So almost a little more bearish?
Well, I mean, we're at 4,400 right now, so how much more bearish is that?
So
You're
some
about 25
volatility in the
basis points
early part of the
bearish to me.
week, and then end of the week below 43.50. All right. So how's that look?
That I'll take it. I'm not watching the stream, so I don't know what to do with it at all.
All right.
It's basically
I just think that
super down,
I mean this week is going to be a big fight, right? I mean, short vol wants to get vol under control again,
Yeah.
and I think that there's enough pressure from liquidity that they're going to continue to struggle to do that. And so we're just going to it's going to be a mess. People are going to lose all sorts of money trying to pick a direction.
So I think Monday we go down 475, back up before end of Monday to like delta neutral. Then Tuesday, I think we go down maybe below, a little below 475, like or 43.75. And then Wednesday, I think we start climbing up, and then we get our fast gamma test, which should have pulled down by then around Wednesday, and then I think bearish into the end of the week, but end of week closing around like 43.85.
So still just kind of volatile and flat.
Yeah.
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 Sounds about right.
I think they're just going to continue to pick up the pieces of their short Vega as the week progresses, and I think they'll try to get a little pump into the middle of the week before the data.
Yeah, that's why I think that's what I mean by flat is just, we like really with these short vol positions, their main goal is to print away their losses, their unrealized losses before they are realized. And part of that is if we trade flat, then that's purely beneficial. And without any big catalysts, there's just, I think it's just going to be flat from their positioning, flat or slightly up.
Poopy
You know,
Pants
at
has
least
an opinion to offer. Not that any of us care, but he
He's
says
convinced it's all going to
44.30 to 44.40 early on, and then down to 43.60. The thing I'm most confident in is that the early part of this week, like tomorrow, is going to be pretty bearish. At least the first half of the day. I don't think there's a lot of potential for bullishness tomorrow. Too many calls closed out of the money, and that's going to get shut off by the MM on T1.
I also really think those notes the selling of those notes is going to matter, because I mean we're getting pretty close to. I mean, what you don't want to have is the risk premium on equities completely close on the 10-year. That's really bad. But we're kind of getting into that realm, right? We're like a 0.1 or 1.7% or excuse
Bless
me,
you.
away. And she's not selling 10 years Monday, Tuesday, but she's selling the 7-year, and the 7 years at 4.36, right?
Mhm.
Which is only about 1% below the risk so the risk premium on SPX right now is 1% over 7 years. If that 7-year goes up significantly, I think that's going to put pressure on just valuations in general. And that, coupled with the suck of liquidity from the 2, 5, and 7 notes, because that's probably not going to come from RRP, or not all of it is going to come from RRP, because it's a little bit too much duration for those money markets. I think that's going to put downward pressure as well. And so then on the other side, you have the vol sellers and people who want to gain control and just want to make income on the market, going up or staying flat. I think they're going to get overtaken on that a little bit.
Also, something to note that we didn't discuss. Thursday is the end of the month, and one of the JPM collars is going to be rolled down. I think it's Fund 2, which is the bigger one.
I mean, that's net bad, right? Or net bullish, isn't it? If it's
No, that's
rolled
not
down.
bearish. Well, we're nowhere near either side of it, right? So it's bearish.
But
Because
if they
upside,
move it down, the long put gets farther away from spot, right? So its effect will decrease.
I think its
And then
current effect is already negligible or
is
non-existent.
it?
Yeah, it's super far out of the money.
What about the
Oh,
sold call?
that's also pretty far out of the money. I think
So maybe it just won't matter then.
I think it was rolled from the last expiry for it was April. So it's just moving flat across the board.
It's not the big one either, right?
No, it's the medium-sized one.
Yeah,
So it's like
people like to
11. It's
talk.
like 11,000 contracts or some shit.
Yeah,
11,400 or something like that.
it's like nothing.
I mean, we might get
some
some
of it,
like some of that, like the fucking Twitter favorite, like spot up, vol up, but I don't think it'll persist. Like it's just
yeah.
both legs are just gonna be like 250 BPS out of the money, right? Or 300 BPS out of the money.
Yeah, I mean, all this is kind of telling me we're just gonna have a wild chop is what I'm expecting this week.
Yeah, yeah.
Yep, pretty much.
So be flexible.
Yep.
Wildly predictions on the economic data.
Or sell shit, right?
Yeah, this might be a decent week to sell stuff, although
If vol stays low, be careful about selling options if we start opening on like IV over
yeah,
17.
I don't know in general that this would be a good week to toe ring anything.
Well, I don't have a choice.
Yeah.
So if you're gonna toe ring something, try to at least get the direction right with a debit spread or something.
Yeah, pretty much. I mean, like the
You know
amount
what? This week, just buy 0.1 delta 0 DTEs at 11 to 12 noon every day for both calls and puts, and just wait for them. I mean, at some point, one of those this week will 10 to 20x.
Ugh. I mean,
one most
I know you're probably right, but it's gross. Also, it'd probably be in the latter half of the week.
Yeah, we'll see. You never know.
That's true. That's true.
The composite man runs on his own schedule.
Prick. All right, that's enough of this shit for today. All right, thank you guys so much for coming on. I appreciate it as always.
Thanks for having us, bud.
Yep, always a pleasure.
I'll see you guys later.
Yep. Bye.
Later. All right, guys. Thank you all for tuning in. I will see you. Well, I'll have the updates out tonight in Pickles Picks, and then I'll see you all tomorrow morning. Have a good one, everybody. Later.